Hey everyone, welcome back to Upside Down Data. Today I want to talk about HBAR, what some of our indicators are making of its price action, and then some other factors we can consider as HBAR tries to navigate this bear market. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter for a lot of updates, better indicators, and more over there. So let's go ahead and talk about HBAR. So I think, HBAR has been in a very nasty downtrend, really along with the rest of the crypto market. It's corrected quite heavily, cleared well below the summer lows, trading now at around 7 cents as I record this video. So that's about a little less than 50% down from the lows of the summer. So a pretty brutal drawdown that we've been experiencing. And so the first indicator that I want to look at is one that I think might be able to give us some kind of an early indication of when this downtrend might be breaking. And that is the market direction classifier, or MDC. So this is a model that really I created it to give a better idea of when macro trends are changing than some other indicators that some other people like to look at, like the 20-week moving average, for example. And I'll actually show you a comparison between those here in a second. And so this yellow line that you're seeing here, basically the way that the MDC works is that for every day, it assesses what the asset is doing, and then it generates a critical level that it is watching. And the idea is that if the price is above that critical level, that's generally bullish, and if it's below that critical level, that's generally bearish. That would suggest that you might be moving into a downtrend. And you can see it does a good job throughout HBAR's past, right? And really with this indicator, the way that I view it is it's, in my opinion, something that really is a risk management type of tool. Now, again, not financial advice, you'd use the data however you see fit, but that's the way that I kind of look at it, where it'll save you from these really nasty drawdowns, but then let you get in to catch these really nice moves to the upside. You'll see that the MDC, allowed you to catch this entire parabolic move to the upside, and then also got you in pretty early here to catch this move to the upside, then gets you out fairly early once this uptrend broke, moving back to the downside, and really just protected you from all of this. There's a slight kind of fake out above it, but again, saving you from this entire devastating move to the downside, if one were to be trading based on this indicator. And as I mentioned, I really generated this because I wanted something that was better than what a lot of other people use as kind of this dividing line between when something's in a bull or a bear market. And a lot of other people look at the 20-week moving average. So that's what I've just overlaid here in purple on the screen. This is what the 20-week moving average looks like. And what you'll see is that, occasionally the MDC and the 20-week move similar to each other. But then in kind of important times in the market, like this big parabolic move, you'll see the MDC coming up and then getting you out well before you would have gotten out based on the 20-week moving average. That also would have gotten you back in for this run up before the 20-week would have, and also would get you out of that as we enter this downtrend faster than the 20-week moving average would have. So that's what I see as the advantage of the MDC, is that it's something that helps you manage risk, and also can just give an indication of when the asset is entering into a new trend. Is it entering into a new uptrend or downtrend? So, here moving into an uptrend, here moving into a downtrend, moving into an uptrend, moving to a downtrend, etc. And it's able to identify those trends faster than something like the 20-week moving average would be able to do. Now, one of the other nice things about this model is because it's looking at a critical level, we can just go ahead and ask it, what is the critical level you're watching right now, to get a sense of how close we are to it. And right now, it's looking at a little over 8 cents. It's about 8.6 cents is the point at which if HBAR could get above that price, it would say, all right, start paying attention. This might be the beginning of a new uptrend. Not guaranteed. Occasionally you'll get these little blips above that fall back below. But it is the case that often that, a necessity of being able to go into a big uptrend is to clear above the MDC. And so I would start getting very interested if HBAR would be able to clear above this price level. Now, this is a dynamic price level, so this will keep on changing. So if HBAR, for example, just keeps consolidating down here, I'd imagine this might continue down towards the price as well. But currently, where it sits is 8.6 cents. So we're trading now at around 7. So if we were to pop up above this level, that's where the MDC would see this as being potentially a bullish move, potentially the start of a new trend. So that's what I'm looking at with HBAR's current price action, is that, from MDC's perspective, nothing to be too excited about yet, but we're not too far off. And so it's something definitely to keep an eye on if we can clear above this critical price. And again, you'll see that the MDC wants some strength from HBAR, but it's a lot, it's going to be a lot quicker to confirm any kind of uptrend than the 20-week is sitting all the way up there. Now, another model that I wanted to talk about, this is one I launched a little bit more, a little bit more recently on the channel, is the plausible range forecast model, or PRF, as I like to abbreviate it. Now, this is a bit messy showing you on the whole history, but I did want to show the whole history first, then let's zoom into more recent price action. The way this model works is that it's a forecast model for the next day. So for every single, day that you're seeing here, the PRF level, being the green going down into red, that is being projected from the previous day. So there's no hindsight bias that's possible. There's no knowledge of the future that's happening in this model. It's projecting all of these levels from the day before. So basically what it's trying to tell you is, on a given day, like say today, what are some plausible price levels for tomorrow? And it'll give you an extreme upper and lower bound. So the extreme upper is the green, extreme lower is the red, and then two intermediate levels, two moderate levels. And it's basically just giving you an idea, if we see some bullish action, here's some kind of moderate targets to be looking for. If we see, extremely bullish action, here's where to look for at the top. Or if we're seeing bearish action, here are the downward targets to look at, both a more moderate and a more extreme case. So again, this is messy. It's really hard to see what's going on. The one thing I will note that I think is just interesting here is that the PRF is something that will be able to account for diminishing volatility as it kind of learns more about an asset. And so you'll see there's more uncertainty in the early stages when the market cap is smaller, when more volatility is plausible. And then it starts to tighten around the price action as it learns more about the asset and figures out, as volatility diminishes, what is more and more plausible as time goes on. So let's talk about what it looks like right now, just kind of zooming more in. So this is zooming into the beginning of this year, 2022, and then just looking at it across time. And so again, what you can see is that really right now, as we go through this, it's mainly been spending most of its time bouncing around between these more moderate levels, right? This is kind of the moderate bullish, moderate bearish level. And what you can see is that by and large, it's kind of been bouncing around between, where you'll come down, you'll get a touch off of the bottom, you'll kind of go, and then you'll go and get a touch off the top, then come back down, touch off the bottom, etc. There hasn't been a whole lot of interaction with the most extreme levels for HBAR throughout this whole drawdown. In fact, the only times we've really gotten there is actually the breakdown that happened, not the more recent capitulation, but the one right before. We ended up touching the most extreme lower bound of what was the model deemed as being plausible. And oftentimes when you do that, you'll tend to see some continuation to the downside. But what's also notable, I think, right now, and suggests something about the momentum with HBAR, is that you can see this entire time, this whole year, we've never actually touched the upper extreme boundary. We got close once, but that was it. We've never actually touched the extreme upper bound. And that can be one indication with this model of what the prevailing momentum is. If you're just never touching the extreme, in this case, positive bound, but you're touching the extreme negative bound, that can be an indication of a negative prevailing momentum. The idea is that you're continually surprising to the downside and you're rarely ever surprising to the upside. That tends to be a hallmark of a low, negative momentum, or a kind of poor market sentiment market, very much a bear market type of behavior. But what I really like about this model is that because it's a projection model, because it's a forecast model, we can go ahead and just ask it, tomorrow, what are some price levels we should look at? And so that's what this is showing you right now, that as I record this on the 22nd of June, 2022, these are the projections for June 23rd of what it thinks are plausible values. And so really the way that the model kind of breaks down is that, roughly speaking, you'd expect to be kind of in between these two bounds most of the time. You'll actually only expect to fall out of these forecasts about 20% of the time. And then with these extreme ones, you expect to stay within them 98% of the time. There's going to be a 2% chance you'd fall outside them, but the vast majority of the time you're going to be in between these two. And so what we can see is that if HBAR had a amazingly positive day tomorrow, if it hit that extreme upper bound, it would actually then flip the MDC positive, which is interesting. So it is within grasp, but it's not especially likely. The far more likely scenario here is that, at best we hit about the 8-cent level, maybe, and then, kind of the more plausible downside target would be going back down to 7 cents, and then breaking all the way down to 6.6 cents would be kind of the more extreme lower target that we'd be looking for. And oftentimes, as you'll see, these kind of center bounds oftentimes will act as support and resistance when they are touched. And then, rarely do we hit those extreme ones, but when we do, they can also sometimes act as support or resistance. So that's what I'm looking at here for the future. Is I'm expecting to fall between these two, but it is possible. There is a chance that we could go up and hit some of these. So this is just really to give us an idea of what to be looking for tomorrow. Just give an idea of what are plausible values and what would be kind of considered to be a really extreme upward target, which might suggest a lot of positive momentum coming back in, or an extreme lower target, which might suggest a capitulation type of event. Okay, so looking at those indicators, basically what we're seeing is kind of poor momentum, and also the possibility, and also, the idea of a trend reversal still not being here yet. We'd have to rally back up closer to the 8.6 cent level for the MDC to start getting to confidence. So that's kind of the current outlook more in the short term. Let's talk about some longer term, more fundamental considerations with HBAR, because I think most HBAR bulls, but the mantra of HBAR bulls is that it's a long-term investment, or at least they are looking at it as being a long-term investment. So they might not really care so much about what's the price going to do tomorrow or what's even going to do in a month. Let's look at the more longer term. Is HBAR going to be able to succeed and then, ultimately go blowing past these all-time highs and go way higher? The $1 HBAR is kind of the mythical level that a lot of people want to see, but then of course a lot of people would like to see it go a lot higher. So as we enter into this bear market, I think the first question that we have to ask is, with any altcoin, anything that's not Bitcoin or Ethereum, which we can be pretty confident are going to survive any bear market they experience, any other altcoin, you have to ask the question, will it survive the bear market? So that's the first question that you have to ask with HBAR is, do you think it's going to survive? Now, I think what a lot of people will point to with HBAR is they'll point to the technology. They'll say it's got this novel consensus mechanism. It's a hash graph. It's not a blockchain. It's kind of potentially this next generation technology. Super high throughput, at least in terms of transactions per second, 10,000, and then, scalable to many more once they introduce things like sharding, etc. But of course, then with smart contracts, it's actually closer to about 350 transactions per second with their EVM system that is built into the network, but still not bad. Definitely competitive with other layer 1 or L1s. And of course, the transaction fees are very low on HBAR as well, which might give it a competitive advantage. But what I'm looking at, one of the things that I look at in a bear market with any kind of L1 or any crypto asset in general, really, is adoption. Because the thing that's going to save an asset from going under in a bear market is if people are using it, if there's kind of some kind of native demand or just building that's happening on it that keeps at least some people into it, some people interested. Even if the price has to bleed off a bunch, if there's building and adoption happening. Because what that can mean is that if you can build kind of a core layer of users during a bear market, kind of a core group of people who are using it, even in really bearish times, so they're not there for speculative reasons, they're there just because they actually want to use the network. And then also if you're getting a lot of building happening on the network by, different developers, be that enterprise, which is really what Hedera-Hashgraph has been targeting in its history, but also retail, things like DeFi adoption, etc. What that can mean is that when the next bull phase comes around, if the asset has a bunch of things built on top of it, that can be just a bunch of different places that can bring in money. Basically, if people want to start using some of the protocols on it, or if businesses start picking up their usage more in more bullish times, whatever the case may be, can drive more demand into the space, more demand for HBAR, more, and then speculation is probably going to come in as well as people see kind of that fervor around the ecosystem. That can lead to really positive price appreciation. So building is one of the metrics that I watch closely in a bear market as being a sign of whether or not something can survive. Because if you're seeing an L1 just getting very little development on it during a bear market, then that's where I get really concerned. Because then, when the bull market comes back, how is it going to compete with another asset that had a bunch of building happening on it? It's probably not. It's going to be really hard. So that's something that I'd like to see. And of course, one of the things that's been unfortunate in some ways for HBAR, or kind of a lot of people point to as being something that's been holding it back potentially, is that it has been a bit behind the curve on some levels of adoption or some levels of development. And specifically, kind of more retail focused or DeFi development has been very much behind on HBAR relative to other platforms like, say, Avalanche, Solana, Phantom, etc. But the good news is, in the bear market, that's the time to build. And so they have the time to catch up. And it looks like the first kind of pieces are starting to fall into place. So Tangent Finance is now gearing up to launch the first decentralized exchange on HBAR, or on Hedera-Hashgraph, which is, of course, essential to have a DeFi ecosystem. You need DEXs. And then ultimately what I'd really like to see is beyond DEXs, I'd like to see borrowing lending protocols start being built. And then really ultimately in this bear market, bear markets are for building. It's when kind of new innovation oftentimes happens to set us up for the next bull run. I'd love to see HBAR, or Hedera-Hashgraph rather, be the home to some really new innovative networks or protocols for that. Now, obviously, there are things already being built, like carbon credit exchanges that are being built on Hedera, which is, of course, kind of a novel thing, but that's obviously different than DeFi, a little bit more specialized in what it's looking at, but still potentially a large market. It's things like that. I'd like to see a lot of things being built like that on Hedera to think that it has both the staying power to kind of stay relevant through this bear market, but also the ability to catapult itself up in the next bull phase, really bring in market participants. But of course, this is a good first step. Certainly behind the curve, plenty of other L1s already have fully established DEXs that are quite large at this point. But, better late than never. So this is, of course, a good sign. Now, the other thing that's interesting with Hedera is that they've also been making some moves to kind of appeal more to the gaming space. So one of the things that was interesting, this is actually, we have an old story by now, but I just want to bring it up because I think it's relevant in these bearish times, was that Ubisoft, one of the kind of largest game developers that's out there, is on Hedera's governing council, and they're kind of working together to potentially do gaming-related things hosted on Hedera-Hashgraph. And that could be a huge deal, right? Because one of the things that's been going on, happened last year, is we started to really see the kind of play-to-earn or blockchain gaming kind of get a lot of hype, kind of pick up some steam, but we didn't really see anything that was all that impressive from that space. A lot of the games that were built on blockchain were not really considered to be very fun. A lot of them were very poorly made, clearly just trying to get into the hype and just make a lot of money through selling NFTs and things like that, with little consideration for the actual enjoyment of the game, or the actually building a good game. So what I'd really like to see building off of this, I think Hedera-Hashgraph is very well set up to be a layer 1 chain underlying games for multiple reasons. It has very cheap transactions, which I think any game will kind of need. Gamers, the last thing they want to do is be spending a ton of money on transaction fees just to do anything on the game. Ideally, they'd like to be able to do things for very cheap and not to worry about it. And with, Hedera-Hashgraph for just a normal transaction costing 1,000th of a cent or somewhere in that, I think that's the level, or something in that ballpark. That's nothing. A person can put in $1 and then have, as many basically transactions forever. They never have to top up that amount. And then even for the smart contract transactions, it's also still very cheap. And so it would not cost a lot of money for someone to be doing it. You put in very little money and it'll last you for a long time. So I think Hedera-Hashgraph has a lot going for it to be in this space. Very fast, quick, instant finality and all that kind of thing, which is very much desirable for gaming. But again, I'd like to see actual strong games be built with this on Hedera. And if that happens, that could both be a driver of demand that could kind of be market condition agnostic. If you build a really great game that uses Hedera on the back end, people will play that game in a bear or a bull market in crypto no matter what, because a lot of people using it probably don't even know if crypto's in a bull or bear market. They don't care. They're just there to play the game. So that would be a potentially driver of organic demand in a bear market that could be quite useful. So still very early days. We don't know if anything's really going to come of this, but it certainly is a move in a direction that I think could be quite beneficial for HBAR if we get there. So what are my kind of overall thoughts then? So in the kind of more short term, I'm not seeing personally any reason to be too excited yet for a reversal with HBAR, or to kind of declare that the bottom is necessarily in. Very well could be. It could be that this wick, all the way down to 4 cents, or, that this, if you want to ignore the wick, kind of these moves down to 5 cents, very well could be the bottom. But really, I don't think HBAR is going to find a bottom until the crypto market finds a bottom. So for me personally, I'm going to be much more interested in what some of these trend indicators like the MDC are saying before I get too excited. I'm not going to get too excited while the MDC still says that's very bearish. And like we just saw with the plausible range forecast, so far the surprises have been to the downside, and we haven't started seeing daily surprise to the upside. And I'd like to see more daily surprise to the upside, and maybe suggest some more momentum as you're entering the market. So, but then of course, long term, as I was mentioning, I think building, that's what we're going to want to watch. Can Hedera really get a lot of adoption and development on it? And if it can, I think it could be setting itself very well up for the next leg. And this is development not only in protocols, but also in technology. Can it keep on building out, making Hedera even more and more expanding on its competitive advantages, basically. Another thing to watch, in my opinion. Alright, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.